welcome back to another session with MMC University. I hope you guys are taking some time to watch the disclaimer, to pay attention to it, and get ready for another exciting session with us. All right, so today we're going to be learning a little bit more about types of stocks by market capitalization. So my name is Claudia Jean. I will be one of your instructors for today. And so please just focus and let's get ready to learn a little bit more about market capitalization. All right, so when we're talking about types of stocks by market capitalization, all that simply means is a way of valuing companies. So that is a way of looking to see how much is a company worth in the market, and it helps investors when they're looking to see what level of risk maybe they're looking to take. So when we're talking about types of market capitalizations, there's normally three major ones and then a couple of other ones there, but large cap stocks, let's start with that. So when we're talking about large cap stocks, we're talking about companies that have been here for a while. They're pretty established. We're talking about the largest companies, what we normally refer to as blue chip companies. They've been there in the industry. They have a pretty good track record. They've been through many economic downturns, and they've proven themselves to be well-established companies with a great track record. They can often be rapidly growing technology companies or big, long-established firms, like I mentioned before, and they have a history of giving a steady dividend payment, and so their share value also tends to go up, and so investors are really looking for that stability when they're looking for large cap stocks in their portfolio. Like I said, they're often called blue chip stocks. So when we're talking about large cap stocks, key thing to remember is that we're talking about companies that have been valued at more than $10 billion. So it's $10 billion or more, that would be referred to as a large cap or the big companies, all right? So the next category we have are mid-cap stocks. What are those? Those are companies that are, they can be large or they can be mid-sized, but they're not as big as the large cap stocks. Normally, they might be established in the industry, but maybe they're focused in niche markets. Maybe they haven't been around as long, so because of their younger age, they're not as established. So mid-cap falls between small cap and large cap companies. And a mid-cap is the term given to companies with a market capitalization or market value between 2 billion to 10 billion. So when you're looking at that 2 to 10 billion, that 2 billion to 10 billion range would be what's considered a mid-cap stock. And then the third type of market capitalization we're looking at are small cap stocks. And what are those? Those are small companies that normally are listed on the national exchanges like the New York Stock Exchange, okay? They tend to be oriented toward growth and produce very little dividends. So these are companies that maybe, they're just starting out, they have some value, but they're not as established as the mid cap and the large cap. And they may not have as many resources as the more established companies, but there's a lot of growth potential, a lot of growth opportunities for those companies. And sometimes investors are looking for that growth potential, and there are normally companies that are expanding. And so they're also more volatile and a little bit riskier for the reasons listed. But also that means that there are great growth potential for the investors. So a note for this is that small cap is generally a company with a market capitalization between 300 million up to 2 billion. And so again, looking at those categories, 300 million to 2 billion, that's a small cap. 2 billion to 10 billion, that's a mid cap, and then 10 billion or more, that's a large cap. All right, guys, so let's take a look at one more type of stock, which is the penny stock. So what are those? A penny stock is a security, it could be any company really, any stock that is trading for less than $5 per share. So if it's trading for less than $5 per share, we consider it to be a penny stock. Normally, those are not listed on the US Stock Exchange. You'd find them traded over the counter. All right. and they're highly speculative in nature, because a small price difference could mean, thousands of dollars in gain for the investor, but, a 10 cents decrease in price could also mean hundreds of dollars of loss for the investor as well. So very highly speculative in nature. And again, because they're not as liquid as the small cap stocks, and because of that, there's a lot of regulation that's involved with that. The SEC rules requires investors to be given a copy of the risk disclosure document before the initial transaction, just because there are different factors that make the penny stocks a little bit riskier than the more established firms that are trading on the stock exchanges. So regardless of the account activity, when it comes to penny stocks, broker-dealers must provide a monthly account statement to the investor if the account holds some form of penny stocks. All right. So guys, thank you for spending some time with me learning about market capitalization.